Hi guys, welcome back to another day, another series of the Q1FY26 earnings season. And in today's video, we will be talking about V2 retail ka con call. So what went down in the con call, what has been happening over there in terms of, the guidance that they had given in FY25 ka end. Are they still, in that trajectory or not? Okay. So first thing first, we knew from the value apparel fashion ka jo update aaya tha, right? Right before result season, we get an update. So we knew few things like we knew few things in the sense like we knew the sales, we knew that the sales was up by 50% in that range, right? We also knew that the ssg that was there, ssg was up by 5%. Usually for v2 retail we see ssg in the north of like 20 or in that 30s ka range, but this time if you see it's not just v2 retail. Even if you compare the other players in the space, whether it is bazaar style retail, whether it is vmart and all the other players, the ssg was reported in a single digit. Why? Because Eid sales that was there. Eid usually happens in the Q1 ka month, but this time Eid fell in Q4, and last year Eid was in Q1. So because of that, SSG looked a little bit, it might give a false statement, or it can look a bit alarming, but that is not the case. Now, even if you remove that, SSG, if you remove that Eid ka month that is there, the other 2 months, if you see, SSG is healthy, quite healthy at 10% that is there, and they've always guided for that, 10% kind of range, right? And so that is that. Next, we knew was in terms of volume growth. We knew also that volume growth was 50%. We also knew that the ASP, that is average selling price that is there, average selling price was at 303 rupees in Q1 versus around 260 rupees in last Q1. Okay. So we knew the update was very, very strong. Now, what we had to look in terms of result season was bottom line, right? Because as you know, V2 was a turnaround story. It just turned EBITDA positive, in all quarters in the last year, and the target for this year is to be PAT positive, in all the in all the 4 quarters, right? So that was it. So even if you look in terms of, even in terms of PAT, you see that the PAT is at 25 crores this year. Quite, quite extraordinary, considering, like I told you, the main target is to be thoda sa at least PAT dikha de har quarter, and the fact that they've done 25 crore is really great. Now, even if you compare the PAT ka growth, PAT was at 16 crore last year and 25 crore, mota moti around 55% kind of growth. So a little bit of operating leverage they've got. Sales grew by 51% and PAT grew by 56%. Now, if you talk about it, the other metrics that is there, let's talk about the two most important metrics. One is the ASP. We saw that the ASP rose, right? ASP went from 260 to 300 rupees. A very healthy growth in ASP. Now, why did this ASP is also a value growth, by the way? So volume growth is 50%. Value growth is also healthy. So why did this value growth come? Value growth didn't necessarily come by increasing the price, but value growth came because they started catering to a better product mix. Like if you look at the entire kya bolte hain, revenue mix of V2 retail, you see that earlier they had this general merchandise matlab kya, आपका towel, आपका ये छोटे छोटा मोटा मोटी चीज जो होता है, selling that. Now this portion was somewhere around 12%, in that range if you look 2 years back. And now if you see general merchandise that is there, it hardly contributes 6%. And the apparel portion that is there, whether it is men, women or kids, the apparel portion has become bigger compared to your general merchandise ka portion towards your top line. So because of a healthy product mix that is there, we see that the ASP has increased, not because of price increase but due to better product mix. The second question that everybody had was with respect to sales per square feet, right? Now if you look at sales per square feet, sales per square feet is at 960 rupees versus last Q1 it was at 1061 rupees. Now sales per square feet looks a little bit dampening. That is because they've added too many stores, as you know, in Q1, right? Because if you remember last year, entire year last year they opened around 74 stores. I think in the last Q1 they opened somewhere between 10 to 15 stores, if I'm not wrong. And this Q1 they opened 28 stores. Now think about it. जब आप store डालते हो, आपका सारा cost, everything is upfront. Even you recognizing that area or that square feet will be upfront. But आपका जो sales होता है, sales comes after a period of time ना. Like first you have to open the store, and then the store has to get accustomed. People need to know that there is a store in this area and everything. So sales जो है वो incrementally आगे जाके आती है. It doesn't come on the day first itself, right? And it takes time for any store to to get mature. It takes at least a year for a for a store, to know how it is working or not. So because of this 28 stores they've added in this one quarter, and the store expansion rate has increased. It is only and only and only because of that आप बोल सकते हो कि like जो आपका sales per square feet है थोड़ा घटा है, that is it. It is not a cause of concern. The last thing is store expansion. Even store expansion, we knew with respect to the press release that they had to open 100 stores in this year. They've already opened 28 stores, taking the total store count to around 216. Now, not just that, in this quarter, that is already we are in Q2 months, they've already added another 9 stores, taking as of now, as of the con call that happened as of today, the total store count is 225. Okay. Now, the other thing we'll talk about is the other update that the company had, which is QIP. Okay. QIP, अगर आप देखते हो, you might see that एक press release आया था उनका that they're planning to raise 400 crores from the, via the QIP route. Now, if you remember in the Q4 को con call, उन्होंने ये बोला था कि like 100 stores open करने के लिए we have cash internal accrual से हो जाएगा. Going forward, if we plan to open more than 100 stores, then yes, we might have to go via the QIP का route, or we might have to go via the debt route, right? And again, they are doing QIP because they want to open a lot more stores. At first in the con call, they when the participant asked like, bro, like, are you being can we be greedy and can we ask कि like आपका store count जो है बढ़ेगा. उन्होंने like सही से जवाब नहीं दिया था, मतलब घुमा फिरा के हाँ ये वो बोल के दिया था, ठीक है, मतलब yes, we are focusing on growth and that and this. But later they told कि like if the QIP goes through, then instead of 100 we will increase it by another 25 stores. Maybe we will open 125 stores. So earlier अगर आप देखते हो, store expansion CAGR was 50%, because last year उनका total number of store was 189. 100 stores add कर रहा है तो 289. It was a roughly 50% की CAGR. Now it would be around somewhere 310 stores, 310 stores, provided QIP happens. Then the store expansion CAGR is again going to be 64% का CAGR आप expect कर सकते हो, ठीक है. And again वो बोल रहा है कि like जो अगला जो साल है, even that year also they will open somewhere around 130 to 140 stores, that in the year FY27, even in that year also they will open 130 to 140 stores. So you can see one good thing is like every time you see as the base gets bigger and bigger, आपका store opening जो है वो कम होता ही जाता है. But here it is becoming ulta, right? जितना base बढ़ता ही जा रहे उतना उनका store का भी like the incremental store that they're adding, that is increasing. I think Zudio is roughly around what, I think 800 stores, somewhere in that range. I think in the next 3-4 years, if they continue this store expansion rate, they can literally beat, they can come close to Zudio, right? Like, because this is the only company that I've seen like every year they've increased the store expansion. If you look back even a few years back, it was 50 stores, then they added 74 stores last year. This year they're targeting 100, but it can be 120, and next year it is going to be 130, 140. So it is crazy, absolutely mayhem. I don't think I've ever seen other than Sky Gold, but Sky Gold is a B2B kind of player, but here in a B2C player, the kind of execution that they're doing, right? Brilliant, literally beast mode ka execution. And in terms of margins bhi agar aap dekhte ho, right, when you talk about the PAT margins and EBITDA margin, even that is also according to the guidance only, because end of the year they're targeting 4 to 5% ka PAT margin. Abhi 3.9% hai. EBITDA margin, the target was 8%, 8 to 9%, but right now if you see, EBITDA margin is at 13.7%, so which is good, right? And उन्होंने ये भी बोला है कि like this EBITDA margin that is there, it can increase by another 200 basis points, provided again they were telling like 3 factors hai, because right now if you see, one of the reasons that margin is still at that 13% kind of ranges, one unka the warehousing, the sourcing, the fact that they've deployed tech, the entire operations part of it is happening through seamlessly. So this is happening. So going forward also, if they can maintain that kind of efficiency in terms of all the other, whether in terms of channel partner, sourcing the materials, warehousing ka kaam sab wo sahi se chala, that is one factor. The second factor is, let's say if the SSG continues to be at, let's say, around 13 to 15%, and if you see that the sales per square feet is also increasing, this is the second factor. And the third factor is let's say product mix keeps getting better over here, right? Let's say higher margin product sell kar raha hai, and like full price ka matlab kya hai? You are not giving any discount or anything. If you look at Q1FY25, full price ka jo portion tha to the revenue was 92%. So 92% of the sale that happened, right, in Q1 of FY25, that came by selling the product at absolute full price, no discount, no end of season sale, nothing. Okay, so if all these three factors go really well, right, like warehousing and all that back end cooperation goes changa, SSG at somewhere between 13 to 15 percentage, sales per square feet also improve, and the third thing, like I told you, better product mix, and full price ka sale, instead of 92%, let's say it either continues to be at 92% or improves until like 95-100%, then obviously they're telling ki like EBITDA margin jo hai, it will continue to improve, even like 200 basis points from here. So overall, very very good set of numbers. The con call was great, the con call was fabulous, literally not one thing that will give you the ick, like, so very very good set of numbers, I can tell. So just rephrasing everything, like just revising everything what we got to know from the V2 con call. Let's do one thing, let's pass it through the checklist. Okay, let's see from the checklist, if we can find anything that makes us want to reject the stock, because like I tell you, right, don't find for reasons to buy the stock, find reasons to reject the stock. If you cannot find even one reason to reject the stock, then it should be in your portfolio. So with V2 retail, let us understand, through our investment checklist, let us understand what is happening. First thing is, we need a high sales growth engine, right? We want either the sales growth, the pace of sales growth to go up, yeah, varna to sustain at that high growth engine. If you look at V2 retail, is it there? Yes, it always grows between 50 to 60%. It continues to grow even in a lean quarter such as Q1, 50% ka sales growth kiya, correct? Yes, well and good. Let's talk about operating leverage. Did it get operating leverage? Yes, 56% se PAT grow hua. Here again, the main target is that they are becoming PAT positive every quarter, because this is more of a turnaround story. So second point cleared? Yes. Third point, let us talk about margins. Has margins improved over here? Yes, because the PAT margin is inching up to 4%, right, as they have guided for. If you look at the EBITDA margin also, EBITDA margin is also sustaining at 13.7, where the guidance was 8 to 9%. Fourth point, let us talk about volume growth. Did we have a good volume growth? Yes. Volume growth was kitna? 50%. Sixth, let's talk about value growth, right? Let's talk about value growth. ASP went from 260 to 300. So again, value growth is also there, volume growth is also there, right? uh, yeah, so that was 5 points. Sixth point, let us talk about product mix. Did the product mix change happen for good or bad, right? Product mix change happening for good matlab kya? Aapka ASP badhega, aapka product, aapka jo margins hai wo bhi badhega. We saw in the first 3-4 points that the margins increased. We also saw that ASP increased. Why? Because wo jo general merchandising, the lower end of the product, which retails for 30-40 rupees, that is there, that portion of the revenue is getting smaller and smaller. Earlier, if you see, it used to be 15-12%, now it is at 6%, right? So product mix change is also happening. Then let's talk about the seventh point. Seventh point is capex, right? Capex, if you see, are they adding more number of stores? Right over here, we have to look at in terms of store count. Guidance kitna tha? 100 stores. They opened 28 stores, and they're telling कि like आगे जाके मैं 100 नहीं 120 करूंगा. Already what is promised is being executed, and on top of that, the guidance that is there, the guidance also has been increased over here. Then the last 2 points, headwinds. Are we seeing any terms of headwinds in terms of demand? No, demand continues to be very strong. The last thing is the competition. As you can see, although the competition is there, these people are rising above the competition, and it is very evident in terms of the kind of numbers, the kind of store expansion. Because think about it, agar aapka competition hai and you are suffering because of the competition, then you would be absolutely crazy to go and open more stores, right? Matlab, there is a problem, you wouldn't, right? So that goes to show you ki like agar competition bhi hai, then they're doing really well. And the last thing over here is the race, because your company can do good in all these factors, but let's say in the industry that you're operating, if there is somebody else, if there is another peer that is performing much better than you, then what happens over here? Agar yahan pe to aapka stock nahi chalega. Now when you compare the peers, aapka peers kaun hai? Aapka peers hai bazaar style retail, which I think did around which didn't do as much as V2 retail, right? I don't remember the exact numbers, but I believe bazaar style retail ka numbers was bazaar style retail did 37%, right? And V2 retail did V2 did 51 37. V-Mart कितना किया? 13%. And trend का तो छोड़ ही दो, उसका तो pace of growth नीचे 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 ही आ रहा है. So again, even in terms of race, we see that V2 retail is leading ahead again with respect to all metrics, right? आप जो भी मैंने metrics बोला, from 0.1 to 0.7 or 8, whatever we spoke about, you see with respect to all metrics, you see that V2 retail is leading the race, right? So overall, that's why you see V2 retail is the best. So if you guys also want to understand how to analyze these companies, do so very smoothly, and understand this different, because this entire checklist, the buts and if of everything, get the investment checklist workshop. The link is in the description box below. So overall, a great update, very very great update. Hopefully that is there, the QIP that is that the QIP goes through, and the board approves the QIP, and there is a really good participation from the institutional side. Because if that happens only, we can see that the store count will become 120 and 140 for the next year. Overall, great. Management reaffirmed the guidance, कि like वो 50% से grow करेगा. Out of that 50%, 40% will come from the new store expansion, and 10% will come from SSG. And उन्होंने वो भी बोला कि like they reaffirmed कि like इस साल हम PAT positive होंगे हर quarter में, and you can expect